What's going on, everybody? In today's video, we're going to be going over one of the most powerful trading strategies that you can use in the market. Now, this strategy is one of my personal favorites, and it's also one of the setups that I used to grow both of my challenge accounts this year. And I'm going to walk you guys through every single step from start to finish, and by the end of this video, you should have a full understanding of the full strategy. So with that being said, let's get right into this video and take a look at exactly how this setup works. So this strategy is very simple. It really has only two basic steps that we need to go over. And it's a strategy that's most commonly known as the Silver Bullet, but it does have a lot of other names as well, so you've probably seen it before. So as I said, it only has two steps, which is going to be a liquidity sweep as the first step, and we're also going to have a fair value gap, which is our second step. So all we look for with this setup is we want to see price come and take out either a previous low or a previous high. And instead of continuing down, I want to see price reverse right back up. Now, the next thing we want to see is a fair value gap that forms, and that's going to be where we take our entry for this trade. So in this case, you would have a fair value gap form after the liquidity sweep, and then we will take our entry once price returns into that fair value gap. So now let's really quickly go over exactly what the parameters are for this setup to make it even more high quality. So we're only going to be trading this setup from 9:30 a.m. to 11 a.m. Eastern time. And we're going to be trading it on the 1, 3, or 5 minute time frames only. So if you see a setup that has a liquidity sweep and a fair value gap, and it also falls within those time frames, you're going to find a very high quality trade that will give you a very low risk, high reward trade. So with that being said, now let's take a look at some real examples in the live market. And these are also trades that I personally took live in the market as well. So here we are on the video on the 3-minute time frame. And the first thing we need to make sure is the time for this setup. As you can see, this setup is right at 9:30 a.m. Eastern time, which is exactly what we want to see. So that checks out and we're good to go for the setup. Now, the next thing I look for is I want to make sure that there is a liquidity sweep. And in this case, we have a very nice liquidity sweep, which is right here at the pre-market high. And the way we know that it's a liquidity sweep, price broke above the high, and instead of continuing and closing the candle above the high, we reversed right back down. So we left a wick, and when we leave a wick, that's a very strong sign of a rejection. So the first step of this setup is down, the liquidity sweep is there, it's at the right time. So now we want to look for a fair value gap to form, and that's where the entry will come in. So let's wait and see if we get a fair value gap that forms, and we'll take our entry if there is one. So right here we get our fair value gap, which is this 3 candle sequence. So every single step of this setup is now complete. We had our liquidity sweep by price taking out the high and rejecting back down. And now we also have our fair value gap, which is right here. So the last thing we look for is price to move back into the fair value gap. We'll take our entry and we'll see what happens from that range. So price moves right back into the fair value gap, and now this is where we will take our entry. And my stop loss is going to go right above the high of this middle candle of the fair value gap. And for our target for exiting this trade, we want to go for the next level, which is our previous low. And for our target for exiting this trade, we want to go for the next previous low, which in this case is right here. And that's where we're looking to exit the trade if price gets there. So now that we have everything we need, now let's take a look and see exactly how this setup plays out. So we get a very nice move down to that previous low, and we take out our profit target. And we even kept dropping even more for deeper profits, but our main focus is going to be at this low for our exit. So one more time, we got our liquidity sweep, we got our fair value gap, and we got a very nice move to our profit target. So the setup is pretty simple, as you guys can see, but we're going to take a look at some more examples so you guys see it even much better. So here we are on NQ on the 3-minute time frame once again. And what do we see right off the bat? We have a very nice liquidity sweep, right? And the way we know that price got a liquidity sweep is if price breaks and instead of closing the candle above the high, we reject and we wick right back down. So just very simply, we want to see price break above the high and we want to see it reverse right back down instead of continuing back up. So the first step of the setup is complete, and now the only thing I want to look for is a fair value gap for our entry. So let's go ahead and see if we get one that forms. So right here we've got a fair value gap that forms right after that liquidity sweep. So the two steps that we need for this setup are now complete, and we want to wait for price to pull back into the fair value gap, and we'll take our entry. So now we can take our entry on this candle right here with a stop loss right above the high of the middle candle of this fair value gap. And now let's take a look where our next previous low is for our exit on this trade. So in this case, our previous low is all the way down here, which is in my opinion way too far. So instead what I'm going to do is target this fair value gap that's sitting right here. So that's where I'll be looking to exit the trade on this setup. So again, we have our liquidity sweep, we have our fair value gap entry. So now we just need to play this setup out and see exactly what happens. So same story again, we come and we take out our profit target right here, but we do still end up getting that move to that low, but in my opinion, it's not worth taking a risk like that, doing your profit target all the way down there. So overall, a very nice move for a pretty solid profit, and we're not really risking too much on this setup right here. So I hope you guys are kind of seeing what I'm talking about with this setup. We have a liquidity sweep, which is a reversal from a high or low. We have a fair value gap, and we have our clear targets and stop loss. We just let the trade ride after that. So you should be understanding by now, but let's take a look at one last example to make it a lot more clear. So you guys should be already understanding it by now, but let's take a look at one more example that'll help you see it even better. So here we are on SPY. On this time, we're using the 1 minute time frame. So you can see we want to use the 1, 3, or 5 minute time frames as always. And what do we have right here? We have our liquidity sweep. Again, the liquidity sweep is price breaking below a previous low, and instead of continuing, we get a reversal back up. So the first step of this setup is down, and now we just need to wait for the second step, which is a fair value gap to form. So let's go ahead and see if we get a fair value gap that pops up. So I want to show you guys something that's different with this setup that will help you a lot in navigating this strategy in the market. So right here we have two different fair value gaps, right? We have one right here, and we also have another that formed right over here. So how do I know which of these setups to actually take my entry on? So the way I personally do it is I go for the first setup that has a fair value gap that tests. In this case, I would look to play the last fair value gap. If price respects this one, I will take my entry off this fair value gap. Now there's other people that prefer to go for the first fair value gap after the liquidity sweep. But again, a lot of the time you will miss this trade because it doesn't always return to that first fair value gap like we did in the first two examples. So sometimes I personally take the one that is the last of the trend. Now, obviously, this is much riskier because you do have room below the level. But again, like I said, that is a personal preference. You guys may miss some setups if you do this, but that really just depends on how you want to go about it. So now let's see how this setup plays out and see exactly how we would trade this. So price comes into the fair value gap, and this is where we will be taking our entry on the trade. And as always, the stop loss goes right under the low of the middle candle. And we want to target the next previous high, but in this case, I'm going to go for this order block as my exit on this trade because this is too low of a target. And personally, the risk to reward is not good enough for me in that case. So again, we have everything we need in this setup. We have our liquidity sweep, we have our fair value gap, and we have our target and stop loss defined. So now the only thing left to do is play this setup out and see what kind of happens from there. So again, we get a nice move right back up to that order block, which again completes another solid setup for this trade, which is again another solid trade using this setup. So just the one thing I wanted to review that I was talking about before we enter this trade. So if you want to play it on the safer side and go for the first fair value gap that forms after the liquidity sweep, you will sometimes miss the trade, and that, like I said, is just going to be a personal preference. But if you want to give yourself more risk and more room for the trade, you can take the last fair value gap that shows up after the liquidity sweep. Now this was another setup that I took with an example like that, where price had our liquidity sweep and we had 3 different fair value gaps. So if you wait for price to test the first fair value gap, you probably won't get that entry. But if you take it off the last fair value gap, you will most likely get a confirmed entry, but it is a lot higher risk because we have more room to the upside. So that part is totally up to you guys if you want to risk more or if you want to stay safer. But in my opinion, like I said, I just go for the more risky way. So hopefully you guys see this strategy a lot more clearly now and it's a little bit easier to understand. So next time you're trading, keep an eye out for this strategy and you will find a lot of great low risk, high reward trades. So I hope you guys enjoyed the video, and if you want to see anything in specific, make sure to drop a comment down below and let me know what you want to see in our next video. Take care, and I'll see you guys back soon.